Hey guys, welcome back to the channel. I hope everyone is doing well. So every time Tesla falls down, uh, people complain about, oh, Tesla's not gonna make it, NAV erosion, blah 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 blah. But almost nobody does anything or you know performs like a calculation or some type of analysis as to how, what about the upside? Um, and I thought I'd maybe take a stab at like a Tesla redemption arc, how if it's possible to return to a $20 NAV. So let's just go into the analysis. First, I think Tesla might be mispriced, and I think TSLY could potentially be still be at a bargain price. And then I wanted to answer the question, well, can Tesla mount one of the greatest comebacks ever in the ETF space? Um, so I was digging through like the financials again, and I like to watch like different Tesla YouTubers, just to get a sense of, are there any like new potential things that we might be overlooking? So I just compared it like against three potential stocks where I think Tesla might be able to kind of like dig away at their market shares. So for example, Enphase, the power walls may or may not be able to take that much in terms of like maybe like the home solar, but I think maybe in terms of like the solar, the battery power, like the energy business. I think that, I mean, it's not a quite like a perfect um, comparison, but I think like maybe, there's a potential there for it to either maybe create like a semi-new space in the industry. And, just to look at like the earnings before, interest, taxes, depreciation, and amortization. Let's just say like we can take, you know, maybe between anywhere between 1 to 10% of like 678 million. That's not, too bad. And then the same thing with Rockwell Automation. Uh, Recently, you may have seen on like social media, like, the optimism spots. So far, like, I guess like in the second iteration, um, I'm amazed at like the dexterity and how well that, they, compared to like other bots. But it's still, obviously we have to be somewhat optimistic that in future versions, like in, maybe like version 3 or version 4, etc., that they might be better at performing more kind of like the human grunt work. That's when I think things will be more interesting. Because if you look at like the Tesla factories, like the automation, not like the human bots, but like just like the machines and how they put together like the cars. I think that's pretty interesting, and I think there might be a way to maybe take away some market share away from Rockwell Automation too. So again, like if you take away, think about like what that could mean. Like again, like if you take like anywhere between 1 to 10% away from like their EBITDA, uh, you know, even 1% of like 1.8 billion is not too bad. And again, you know, thinking even further out, in terms of intuitive surgical, like robots that can actually perform surgery. That's a pretty decent chunk of business as well. But of course, like the current Optimus spots, I don't, expect them to to put on like the surgical mask and like perform surgery on like humans anytime soon. But we'll have to think ahead, like maybe in version like you know maybe version 10 or something like that. Maybe they'll start um, you know you know especially if they start incorporating like artificial intelligence, and maybe uh, have it look over the shoulders, so to speak, of like actual surgeons. That could be an interesting business line in the future too. So again, take 1% of like 2 billion. Again, not too bad. But again, this is just like all speculation. And a lot of it depends on like investor demand and supply as well. But I think like because people keep thinking of like the cars and like the cyber trucks and whatnot, that people might be overlooking like their energy business. and potentially another emerging business, and like the Optimus spots might be overlooked. Sometimes like the first iterations, like they look like toys, but then like at the rate of like how far like they're advancing, sometime next year or even the year after that, when they start doing like actual like human actual like work, that could be interesting. Well, I mean, it might be bad news for like certain jobs, but like it could be like really good news for Tesla. And then I want to kind of remind people about what happened in 2021 regarding like the gamma squeezes. I think GameStop and some of the other meme stocks, they got a lot of the attention. But if you think about it, Tesla was kind of like the original meme stock. So I kind of want to refresh people on like what a gamma squeeze is. Um, all it takes is for like a few quarters of like positive earning surprises, and then the short sellers will be like in really big trouble. Um, and I found like this funny song from like Ice Cube from back in the day, like No Vaseline. And that's probably where like the short sellers will be feeling if and when like a gamma squeeze occurs again. So basically, just a review over what a gamma squeeze is. Every time speculators take a bet, usually on like the upside. Like for example, if like you and I we both pull our money together, and we all of us buys like like one call contract. Market makers have to take the other side of that trade, so they have to be short calls. But market makers, they don't want that nonsense. They don't want to take any positional risk. Really, what they want is just like the bid and ask differential, and then multiply that over like millions of contracts, and that's really what they want. So they need to hedge. In order to hedge a short call, you're gonna have to hedge, like the delta risk, so they have to buy stock. And then like once the stock pumps, that encourages people to, well, wow, Tesla's really doing great, blah blah blah. So then what do they do? Like it's almost like a positive feedback loop, but it's like a and also like a buying frenzy at the same time. Uh, so remember, like in with GameStop back in like 2021, like I mean, if you think about it from a fundamental standpoint, GameStop was not a good stock, but it's just like the call buying and the gamma squeeze that caused a lot of attention to be drawn to this issue. But then over time it kind of collapsed on itself. But there's no reason why this couldn't return, especially if like once if and when the Federal Reserve decides to cut interest rates, that'll help stocks like Tesla, just because like well in general it'll help everybody, but especially like a stock like Tesla. First, like your margin interest rates will go down, and unfortunately that'll also like encourage speculative behavior. Um, and then it's so at that point it'll be like a positive feedback loop. Um, and if I recall correctly, originally Tesla I think hit something crazy like $1,000 or above, and then they did like stock splits, etc. And then like the short sellers will really be in trouble because even though like stock splits don't really affect your overall value of like the stock, it just it's more like a psychological effect. It makes things look cheaper than it really is, and then like the the stock buying could get really crazy. So again, uh, you know, don't underestimate the power of like a name brand, uh, especially like you know Elon Elon Musk likes to just like play around on the internet, but he has a really good grasp on human psychology and how to just like influence like the masses, uh, both for good or bad. I mean, if you think about it, just like the amount of YouTube channels that's dedicated just to like Tesla products is pretty insane. So I think never underestimate the power uh, of a of a crazy fan, or or even better, like crazy fans with money. And then he also has like a lot of like I don't exactly know how to describe it, but it's kind of like anti-establishment. So just the fact that electric vehicles. It threatens a lot of potentially, kind of like entrenched businesses like related to like oil and gas. They kind of have to fight back through kind of like political means. Um, but anyway, I don't want to get too crazy into that. They have a lot of also they have like a weird way of like finding like just like product market fit. Like for example, just like the Cybertruck. I mean, it looks like in my eyes, it looks okay. But people just like fawn over it, and like they're still working through like the crazy like wait list, and people are willing to pay that amount of money. And don't forget, like over time, like uh, Tesla has made a lot of millionaires, including like their just their employees. So that's also another factor. Like people are very loyal to this particular brand. So you never know if this is like really filet mignon at like Burger King prices, because it's still kind of stuck. Like every time it tries to hit like 250, 260, like something happens and like the stock takes a hit. So I'm wondering if it's short sellers temporarily suppressing the price, or maybe it's just like people taking just like at the year end, like either a tax loss depending on what you and when they bought, or maybe they're just just like taking temporary profits and then like repositioning later. And then of course like Tesla itself, it's still hovering like near the 52-week lows. So I think I'm depending on how well my week goes, I might be able to like snatch up some additional shares while it's still down. But again, it's just my money. You guys can choose what you want to do. And then we also have to kind of look through like the NAV, the net asset value components. Don't forget, like, every time people put in money or take away money, that kind of it's kind of like a pain in the butt for the yield max managers to kind of adjust like the positions. Because remember, it's a three-legged trade. Again, it's a long call and a short put at like a further out expiration cycle, and then like ideally, Max is able to short calls every week. So just to go back to the net asset value, there's a sleazy way that they could bring back the just the price back to $20. I've seen this with other ETF companies where like if a stock drops to a really low level, just to restore confidence, they'll do like reverse like stock splits. So basically, you're just chopping like the shares outstanding in half, and then assuming like the everything stays the same, the price should double to like $23.94 at the time of this video. It's just good for optics, but your overall assets is just gonna stay the same. It doesn't really do anything. It's more for like a psychological effect. So that's kind of the sleazy way. And this is what I call like the honorable way, where like just based on like manager performance, if you're able to short the calls at at the right time and the right place, eventually you can kind of get back to $20. But now we have to kind of go through kind of like the boring like math stuff. So I'm assuming that assuming that they can maintain like a constant short call win at like this particular amount. And of course, I know this is not realistic because like implied volatility changes week to week. Well, let's just say, for example, we're looking at this particular example at this point in time, like the short calls. It's going to bring in about 8.8 million a week, and then like assuming that the current price at the time of this recording is around $11.87. So if you want to get back to $20, we have to make up this 8,013 cents shortfall somewhere. So then I just divided like the short call premium by the number of shares outstanding again at the time of this recording, and that should bring you about like 12 cents net asset value a week. So, just going through the math, you take in the shortfall and divide it by like the 12 cents. So that's gonna, assuming everything goes right, we're looking at a potential 67 week recovery. So about like, a little over like a year and a quarter. Again, just to kind of recap, so, assuming everything goes right, it's a 67-week recovery. And I know what the next question is going to be. It's going to be, but Panda, what about the distributions? Well, this is where the short calls and well, excuse me, the long call and the short put comes in. Um, and so far, they've been able to maintain a 67 cent average monthly payout. So assuming everything goes right also with the long call itself, your like your profit level is capped again. So assuming a $12.50 profit, because again, if you look at the long call and the short call, it's 250, and then the 262.50 is the where you're capped at. So that's the $12.50 profit. And then again, assuming the same amount of contracts uh, here, let's just assume, you know, again, doing the math, you multiply it by the number of contracts that they had and divide it by the shares outstanding. That's only a 1 cent NAV a month, because I'm assuming that they go they're gonna maintain like this uh for the long call and the short put, like it's done like once a month. I know like in some of the past trades, like it's been a little bit all over the place. But again, just for simplicity's sake, we're gonna assume like 1 cent a month. And then we're also gonna assume like the short put, uh, you know, again taking like the amount collected divided by the shares outstanding. That could be potentially another 57 cents a month. So you add them both together, it's about 58 cents. Uh, and then like, but remember, we have to pay out like, or try to pay out like an average of 76 cents a month. Um, so that unfortunately will be like an overall, like the net erosion about negative 18 cents a month, assuming that they try to maintain a 60, excuse me, 76 cent payout, which will set back the recovery process. But again, you have to respect the fact that there's a lot of moving parts here. And then I also want to show you something interesting. Remember the 58 cent payout? Well, if you look at the past few months, like, for, since September, you'll notice that the payout is actually trended down, also like around like the 58 cent mark. So I'm wondering if they're also like when they're modeling like the payouts, if they're doing like something similar. So it's not like they're not aware. It's just like their hands are tied. Like you need Tesla itself to kind of uh, do their part and like perform as well. But like a lot of this is kind of speculative in nature. But I also kind of also want to show you guys like kind of like the good news about Tesla. It's not all doom and gloom. I just wanted to at least like wrap some numbers and potential like estimates of like uh you know when it could actually recover. So again, like it's just an estimate. Don't hold anyone to like a particular target because this is pretty hard work. So again, there is some good news. I went all the way back because remember, like originally, my estimate was 67-week recovery, assuming everything goes well. Um, so that places us out to like around like I guess like the closest expiration cycle is the June 20th, 2025. But you'll notice something interesting. Like the top call at the time of this recording is 560, which is more than double of the price at the time of this recording at 252. And then you'll notice also something interesting too, like where this is a pretty healthy amount of like open interest for such a like such a long dated expiration cycle. Of course, it's not a guarantee it's gonna go to 560, but you have to figure like why would the market makers open up like this high if they're not concerned, or like if they're don't expect any business. Like market makers aren't gonna open up like strikes this high for no reason. There's probably like some demand there, and that's why they opened it. And I wouldn't be so surprised if they opened it up all the way to 600. But again, it's just speculation on my part. Um, and if you notice something funny also on the put side, like there's, you shouldn't expect like too much, but just even just like taking a quick eyeball like at the corresponding levels, like the open interest is much higher than the like the put side. So, and if you notice, like it is pretty funny why how there's already like activity at like a the 410 put side like in the money. So it's kind of interesting just to note these things. But anyway, I just want to say like the Max managers are doing a good job, all things considering, because this is pretty tough. Like you have to manage like how far you want to put the synthetic long, and then you also like have to worry about like the weekly short calls. Um, so again, like, you have to respect the fact that there's a lot of moving parts. Um, and then like I wouldn't be surprised like if Tesla like underperforms too. Like a sacrifice is gonna have to be made if you want to maintain like the a certain amount of I guess like the share price, and then also the like a certain amount of yield as well. Because like unfortunately like the overall volatility in the market is trending down. So hopefully things will work out in another year or so. So again, this is just like my opinion. I still think it's relatively cheap compared to, I guess, like corresponding other yield max products, and then also, yeah, like even like compared to like the fines products as well. I think Tesla, at least for me, is still a decent source of yield. But of course, like you still have to kind of diversify into other products as well. If you're stuck with like Tesla at like a higher cost basis, then you definitely need some diversification into other ETFs or even like just like other investments. Of course, like the expense ratio is still relatively high compared to like competing products. Obviously we don't have any control over the option strike selection. And then, unfortunately, we're also witnessing like the implied volatility going down. And yes, definitely that it's annoying that there is such NAV erosion, but it can actually go even lower. Uh, you know, Unfortunately, if Tesla has like another round of bad news or fear, uncertainty, doubt, so we have to just keep in mind that yields won't be consistent month to month. Um, if you like this type of analysis, please consider giving it a like. Um, and of course, I'm very thankful for all the new subscribers and old subscribers as well. Uh, because it's kind of tough, like going through like these analyses and just like I feel like this is like a Tesla therapy session. So again, I just want to thank everybody for watching. Uh, Please have a great one, and I hope everybody makes some good money out there. So thank you, and have a great one. Bye now.